What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 19, July 5th, 2023. We made some trades today, so let's get into it. So let's start our analysis this morning when the market opened at 9:30. So on yesterday, it was July 4th, and on the day before that, it was July 3rd. So we haven't really had too much market activity going on. So today is in my view is really more so the first full day of the week, so we should see some pretty good action. So when the market opened up, we had a large bull spike to the upside that went from a price of about 34,450 all the way back up to about 34,530. So a smooth 80 points to open the market. So once we pulled back, this is where I started to get into the market and I placed my first two trades. So let's read these notes. So on trades 1 through 2, I went short here expecting for prices to come straight back down, but what I should do is wait for more confirmation. Now, a lot of times when you see a pattern like this where you have a bull spike that leads to the upside that has multiple candles, a lot of times if there is no pullback within that spike, it has a higher probability of reversing all the way down the same way that it went up. So let's look at a couple of examples so I can show you what I was really talking about. So let's pull up our bull spikes in our notes and let me show you a good example. Not that one. Okay, so this is a good one, a decent one, where we have a spike in the market where we move up. It's nothing but green candles, a continuous bull spike to the upside. Now right here, we formed more of a consolidation. We formed a lower high right here, and then we came all the way back down to the same spot where the bull spike started from. So let me see, what's another good one? Okay, here's a really good one also. Notice how we had a bear spike all the way to the downside that had no pullbacks whatsoever. So whenever you see a spike with no pullbacks, that means that if prices ever were to reverse, there won't be too many levels of support or resistance that people feel like they could maybe catch the market right here at. Instead, everybody is pretty much going to be jumping over each other trying to get out. And that's exactly what we saw here. We saw prices spike all the way down and then come right back up to where they came from. So let's look for bullish examples. Let's see, what's a perfect one? Let's get one last one in here and then we can move on. Let me see. What I really like to call this pattern, I like to call it going straight up and straight back down. So here's a good one right here. Notice how we had a bull spike to the upside, nothing but green candles the whole way up. Really is no major pullback. So when the market starts to fall back over, you had one pullback, but a lot of times it'll just fall straight back down exactly to where it came from. So in today's session, that's what I was looking for when it came to trade one, because notice how we had that big spike to the upside. We established a swing high and then we started selling off hard. So I'm like, okay, I think I see what's about to come. But here's the thing. Just because I have those ideas doesn't mean that I necessarily have to act on those ideas immediately. It's more so about having the idea and then waiting for the market to give me confirmation where I can say, oh, okay, I had the idea. Now I see it coming to fruition. So let me start to position myself on the right side of the trade and the right side of the market. So I think that's the biggest takeaway from trade number one. Just even if you have an idea, just be patient and wait for that confirmation. And then on trade 2 right here, that was just a bonehead decision by me where I had a trade that didn't work in my favor and I came back and took it again. Now, that's a strategy that I use sometimes in some scenarios in the market, but I only want to take the same trade twice if prices either come back to stop me out at break even or stop me out for a small loss and then immediately spike back through the same price that I entered at. But that was not the scenario on trade number 2. If anything, trade number 2 just showed me that you shouldn't really try and enter the short trade at the lowest prices, because look at how this right here established a swing low. The closer you are to the swing low, the less likely the probabilities of you seeing continuation immediately. Continuation might happen, but first it'll more likely be a pullback if anything. And because I trade with such a tight stop, a pullback is definitely gonna stop me out. So it's more so about looking for that confirmation, just like we were talking about on trade 1. Because look at what happened after we moved past these couple of trades, these first two. We have a double top up here, right? We touched the top of the zone, we came back, retested the bottom, and came up and created a lower high. Now right here, I was looking to go short, but I was looking for more of a confirmation signal because I said, okay, I see the double top and the lower high, so I know I should be going short. But let me just see prices pull back and touch the top of the channel line, and then I want to go short. But this was one of those scenarios where you had the double top and the lower high, and then the market just moved down. So I missed the short trade on that one, and I should have just let that trade and that idea go. But I came back at trade 3 and I tried to trade the breakout. So let's read the notes. So I shorted here expecting for the breakout retest to be successful, but I should be more patient. And that's the same thing I was talking about when it came to trade 1, just waiting for your idea to come to fruition and not jumping the gun and trying to get too far ahead of it. Because usually if I want to break out retest the work, I would like to see prices come back up, retest the zone or the level that they just broke out from, and then I want to see prices start moving away from that level. On trade 3 today, what I did was I put my order up here before prices even started to make this bullish move, just letting the order sit there in expectation that when it got there, it should do what I wanted it to. But what I should do going forward is wait for prices to get to that level. Don't place an order right away, but instead observe, see what the market does and what the reaction is around that level. And then if I like what I see, then I can take that trade that I want to. So when it comes down to trades 1, 2, and 3, patience is a major factor. It's not just about having the right idea. It's about having the right idea and the right timing. That's very important. So that brings us to trade 4. We see prices come all the way back up to the top of the zone. Now, I think I drew this zone not when this double top was formed, but I believe once we had the double top and then we came back and retested it right here. That's when I drew my zone. So once prices came back up into trade number 4, I shorted as prices reached the top of the zone, but I wasn't sure about the trade, so I cut it quickly. And that's one of the things that I use and like to employ with my strategy, where I take a trade and if it doesn't go in my favor immediately, I start to question it. Now, sometimes that prevents me from taking big losses, but in scenarios like this, it'll prevent me from taking really good trades and being able to capitalize on those gains. And I think, it comes to a point where you have to decide, am I protecting myself from losses or am I holding myself back from my best trades? I would say in this situation, it would be the latter, because there really wasn't a big reason for me to close the trade right here, because if I shorted right here at 32, the top of the zone was at 34. I think, let's see what the high for this candle was. The high for this candle was 36. So when it came to it, the prices went against me by 4 points at the most. So I don't think a trade going against me by 4 points is something where I should necessarily panic over, especially when everything lines up and makes sense. One of my biggest rules about trading the zone is that prices, when they're in the zone, have a tendency to stay in that zone. So even though it might seem like prices are going to break out, because what I was looking at this higher low, and I'm like, do I really want to keep holding this trade against the higher low? Usually you don't. But when it comes to a consolidation zone, you have to place priority for the zone first and then the price action next. Even though you might have a higher low inside of the zone, it doesn't mean that it's going to lead to a breakout. It means that more than likely it's going to get traders to go long, get them faked out, and get them trapped on the upside. And then pretty much those traders are going to be having all of their stops get hit on the way down as prices come back to the bottom of the zone. So that's just what I learned right there on trade 4. Learn to accept the risk when it comes to your best setups and just be able to live with it. I think the biggest reason I probably closed this trade out was I was scared to take that loss, especially after I took that loss on trade 2. I took the loss on trade 3. I'm like, man, if I come back and take a loss on this one, I got to stop for the day. I'm way out of rhythm. So I think I was focusing too much on the results of the trade and not the process when it came to it. But when it came back down to trade 5, I got right back into that move when I saw that it was going in my favor. So I shorted again based on the same idea from trade 4, and my break even stop got hit. So once I saw prices come back and make this lower high right here, I said, okay, the idea that I had from trade 4 is probably coming back to fruition and coming back into play. Now, I want to talk about the entry for trade number 5, because even though I saw prices going my way and I hopped in right here, I still could have had a better entry because prices eventually did come back up to retest the top of the consolidation zone one more time. So my entry was okay right here, but I think it could be a lot better. You always want to find those optimal areas where you can take your trades from, because a lot of times, because I trade with a tight stop, I gotta get my trades from the best possible levels, or else I risk the chance of me getting stopped out being a higher probability. So my entry is all right, but in the future, just think about shorting from higher prices. Now, I want to talk about break even trades too, because on trade 5, pretty much everything went right. My idea was right, my timing was right, just the market just came back and hit my break even stop. And sometimes it can just be like that, because we see that prices eventually came back and hit where my original profit target would have been. Now, I think in this scenario, I did a good job because I didn't chase the market. I had my trade, I put it in, it didn't work for me, it came back to hit my break even, but my break even stop getting hit doesn't really affect me. If anything, it gives me more confidence, because that's telling me that, okay, I'm in line with the market. It's just not going my way at this point in time per se, but if I keep making decisions like these, I should be able to come out on top at the end of the session. So I did a good job right there of just being disciplined and not chasing after the market. So we see prices eventually break back down through the zone, come back, retest that level that they broke out from earlier at around 947 this morning. And then we see a higher low get created around 34,500 right near the bottom of the zone. Now, I saw this higher low get created, but because I saw prices kind of trending down like they were so far, I was a little bit skeptical about taking that long trade. But looking back in retrospect, that was actually probably one of the best setups of the day, because we saw a false breakout of the zone, and then we saw prices come back and form a higher low right below the zone. Now that right there is actually one of my favorite setups, where you have a higher low that gets formed right below the zone, or a lower high that gets formed right above the zone. So in this scenario, since it's a bullish market, we're talking about a higher low formed below. Now, usually when that happens, it gives the market a much higher probability of not only coming back into the zone, but coming back to test the top level of the zone once more. So I think me passing up on that one, I just missed that trade right there. But that's okay. Sometimes it goes like that. But as long as you learn your lesson and say, okay, the next time I see something like that, I can be more confident taking it. And also another thing that I'm remembering now that I'm talking about this is that when I look at my charts and I'm trading actively, I always want to favor the most recent price action. So even though we did have a series of lower lows and lower highs that eventually broke out of the zone, that happened before the higher low got formed. So since the higher low was the most recent thing that got formed, even though all of this happened, I still take that into consideration, but I got to make my move based on the most recent activity. So even though it might be tempting and it might feel good to not take that trade, you got to embrace that uncomfortableness and follow your strategy no matter what, and be able to accept the losses or the gains that come with it. And I think that was a big thing for me today. Just I wasn't accepting the risk on a lot of the trades that I took, or a lot of the trades that I possibly could have taken. And I think ultimately that goes back to making the right decisions. I feel as though maybe if I would have made better decisions at 1 and 2, I wouldn't have been so nervous at 3. And if I didn't make that trade at 3, I would have probably been able to hold that trade at 4 and maybe double up on it and take trade number 5. So, it's just a series of events in the future that are a chain reaction of things that you've done in the past. So you want to make sure that those decisions that you make, whether large or small, put you on the right track and set you up for success in the future. So once we made this higher low, that brought us to trade number 6. Now right here, I shorted here, expecting for the uptrend to lose steam. Now, luckily I didn't take a loss on this one, because I did short against lower highs, and that's something that I really don't want to do, like I was talking about earlier. Because anytime you see that higher low, you might think that this resistance level up here is going to hold up, but that higher low is powerful, very powerful, especially when the trend was already up. If we go back to the pre-market, we had actually been moving up since, what is this, around 8:56 this morning, from a price of about 34,440. So the uptrend was pretty well established during that time. So when I see those higher lows, it's like, okay, even though you do see the resistance up here, if the higher low is right there, you got to look for the long trades, or you just sit on your hands until you see a more clear signal. But you definitely don't want to go short. Now, in this scenario, I could have potentially taken it back to the bottom of the zone. That was a good profit target, and it would have been a good trade. But I was like, if prices had been moving down and they ultimately came back up to retest this level of resistance, I believe that they should either come back and retest this previous higher low, or retest this previous swing low that we made once we broke out of the zone from earlier at around 10 o'clock this morning. But no matter what the scenario might be, when it comes to that higher low, you do not want to go short. So that's the biggest lesson I learned right there, and I'm super lucky I didn't have to take a bigger loss on that, because that would have added to the loss total that I already had for this particular day. So we came back up, retested the top of the zone. But what I want to talk about, let's look at the duration of time between trade number 6 and trade number 7. I took trade number 6 at around 10:23 this morning, and then I took trade number 7 at around 11:09. So a little bit less than roughly 50 minutes in between those two trades. And the reason I took that much time was because after trade 6, I just felt as though I was out of rhythm with the market, because the market is in an uptrend and I'm trying to trade against that. So I said, you know what, instead of me trying to keep fighting the market, let me just take a step back, relax, observe what's going on, see exactly what the market is doing. And then when I see something that I clearly recognize, I'll get back in and I'll start to take my trade. So I just observed the market after trade 6. I saw it come back up to the top of the zone. We created a double top right here and right here at this candle. We pulled back down all the way to the bottom of the zone once more after the double top, created a higher low in comparison to where we came from at 10:28, and then where we came from at 10:17 this morning. So we could actually, let's actually connect those. Okay, so whenever you see higher lows like that, even though we might have been in the zone, the overall picture still matters. And when you see a trend line like this, it tells you that the overall trend is up. And then when you add that into the fact that we had already been trending up since the pre-market, remember we just looked at that earlier, that tells you that the uptrend is definitely in full swing. So it'll be no reason at all why I should be going short or looking for any short trades. So with that in mind, I was like, okay, let me start looking for my long trades. So we see prices come back up. They actually finally broke out of the zone to the upside, came back and retested it. Now right here, I was expecting prices to come back, retest this breakout level one more time, and then go long. But prices actually continued to move up, created a new swing high for the day. And then I was like, okay, if that's the new swing high, we should come back to retest. I would call this a little micro consolidation zone right here, because notice how when we came up to this level, this at one point in time was the high for the day. And then we broke above that and started trading on top of that level. So let's actually just draw a little level of support right there, because usually when you have a level in the market that was once resistance, once it breaks above it, it should become support once again. So that's exactly what I was looking for right there. And I put my order right here at the intersection of support and resistance. And when prices came back to that level, I went long, and then I was able to take prices back up to my scalp target about 20 points higher. Now, after that, I was done for the day, because I felt like I was struggling a little bit at first, but I finally came back and got things right when I took the time out to actually really think about where the market is going, what is it doing, and based on what I'm seeing, what would be the best possible places to get into this market. So I just wanted to end the day on a good note, because that right there is what I should ultimately be looking to do on my trades. And I think Today, one of the biggest lessons that I took away from this entire session was that it's the small things that make the biggest difference. Because I had some good trades today and some good entries, like trade number 4, trade number 5. Um, I would say, yeah, trade number 4, trade number 5, and trade number 7. And you could throw trade number 6 in there too. All of those were really good entries that could have been profitable for me, but for one reason or another, it didn't turn out that way. So it really comes down to those small decisions. One bad mistake could lead to not only a bad trade on that particular entry, but you also being a little less confident on your trades that come after. So that's why I say it's so important to focus on the small things. Every decision that you make in the market, it matters. And it's going to make a difference, not only just right now, but also later on in the future. So I think overall, I need to focus more so on not taking trades where I feel like it could work. So I think that comes back to just focusing on my best possible setups, and not just my best possible setups, but trading my best setups the best possible way that I'm supposed to based on my trading plan. Because it's one thing to see what I know, but it's another thing to trade it the right way. So going into my back testing session tonight, that's really what I want to focus on the most. I just want to say, okay, if I see an opportunity, let me evaluate how strongly I believe in the opportunity. And if it's one of my favorite setups, I'll take it and I'll be willing to accept the risk that comes behind that. But if it's not one of my go-to setups, I just got to let it go. It's a trader out there that'll probably take that trade, but it's not going to be me. So I think most importantly, it comes down to discipline. Everything that we talked about today, it's all discipline, making the right decisions and doing the right thing. So I think me being able to identify that is me being able to start to take steps in the right direction moving forward. So I appreciate you guys for tuning in with me. It's been a good day so far. I learned a lot in this session, and I hope you guys did too. I'll be back tomorrow on July 6th, 2023, 9:30 a.m. sharp. But until then, you guys, take it easy.